Kia ora. This is the preparation of financial statements, part B. So we've done the journals, we've posted to the trial balance, we've got the closing balances. The next thing is they want us to group the expenses into these categories, and they've given us the categories. Some will just go directly in there, some need to be apportioned between the categories. Okay, so we just need to know where these things are going to go, right? So advertising is a distribution cost. Okay, so I can pick that up there. Okay, audit fees is an administration cost. We can pick that one up there. Okay, bad debts is an administration cost. Okay, bank charges, the same. If I just copy that down, that should work. Depreciation building is okay. Actually, the other way I was going to do this, which worked for me better last time, and I'll do this time, is actually just copy those. This is a better way to do it. Shift, I just copy all of those. No, actually, even better, I just go like this. The total for that is that. Okay, now I remember how I did it. Okay, so I just got all the figures down here, so I don't have to go backwards and forwards, right? Then it's easier for me. This check one is just checking that I've put it across, right? So that equals that. Yeah, this is a much better way to do it. This equals that. You're going to get the same answer, but this way is just a lot easier and quicker, right? Okay. Right. Now this is where this comes in handy, having that there, because that can be that times that. Cool. Right, so I just make this one here an absolute. Okay. These are the fast keys to make absolutes, but I'll just do it the old conventional way. And if I copy that over there, boom, that should bring it, and that works. Cool. Alright, so the next one, same sort of deal. It's that times its percentage down to the plant and there. Okay, make the first reference absolute, so I don't have to do it all the time. Okay, so that's that. Okay, this one times director's fees is that one. Make that an absolute. Copy that across. We're going well. Doubtful debts is just a straightforward pickup, and that's an admin cost. Okay, it's there. Income tax expense, I've got here as other. Okay, I must have already left the formula in there. Okay, I've obviously left the formula in there as well, but well, you know, you can see what I'm doing anyway. That's another one as well. Okay, income tax, done that. Interest paid, that's a financial one. Okay, interest paid term loan equals that one. Other expenses, well, this is an apportionment as well, equals that times other expenses down there. Make that an absolute, so I can copy it across. Okay, that makes sense because it's 0. Okay, so that works. And the rest should be there. Cool. So all these are checking down the side that I've got. I'm picking them all up correctly. Purchases is definitely a cost of goods sold. So I know what that is. And wages is again a split. So it's that times wages. Okay, make that an absolute. Okay, and that across. Cool. Right, don't need it there. Just going to give you 0 anyway. That marries up to that. Okay, so my check, that's why I've got that check column there. Cool. I've also got these in oranges because these are the things that I'm going to pick up for the when I put things to the accounts. Right, so now I do the notes to the accounts and I'd fill in the accounts. Right, so I might start with the notes to the accounts, which is down here. What is my sales figure? My sales figure I can pick up from the trial balance, which is that figure there. Okay, my interest, spelt incorrectly, interest received is other income, which is this figure here. Okay, right, so that's in the income statement, right? Financial costs, because this is where things are going to add up. Interest, financial costs is that, and that. These are my two financial costs. I could pick them up from the trial balance or there. Okay, that total should equal that. Taxation, taxable profit equals taxable profit. Okay, might come back to this because probably need to get that from here. Okay, so I know I can come back to that one. Okay, right. Taxation. Then there's distribution, which is an equity thing. Okay, these are balance sheet items. Let's think. I might actually populate my income statement now. Okay, so I have got sales. You can either pick it up from there, or you can pick it up from the notes. All right, because it should be the same anyway. Okay, cost of goods sold. You're going to need to pick it up from here. Right. Gross profit is a calculation. I might actually do that as minus that. That's easier for me in my calculations. Okay, minus that. Okay. Don't know what's not showing as a minus. Is that already a minus? No, it's not. Let's just format. Okay. Okay. Just formatting this so it looks a bit tidier. Okay, therefore I can just do the sum of that, and that'll give me my gross profit. Okay, you can do fancy things like, wouldn't waste too much time on the exam though. Okay, this looks a bit better for me anyway. Okay, I can see that it's still not looking like I thought I wanted it. Okay, less operating expenses. Okay, so you've got distribution, which we've worked out is that one. And again, if I do it as a minus, it works better for me. And that's minus the next one. Okay, total operating expenses will be those. Okay, operating profit is the gross profit less those ones. Okay, less financial costs. Financial was over here, plus other income. It's actually other income is either in the note or up there in the trial balance. Okay, should be the same. They are the same, if you get what I mean. Profit before tax. Okay, so that is operating profit. Okay, summing those gives you that. Income tax expense. Actually, we do know what the income tax expense is because we did the journal. Okay, so I'm not sure what I was talking about. I was thinking I was having to work it out again. Taxable profit is what I wanted actually. Taxable profit is that. Okay, it tells us what the income tax was. Up here, other income tax expense. I'm just going to do a bit of a test. It's 26% for some reason. Anyway, we'll let them off. Okay. They've calculated that figure. They've given it. There must be some other non-taxable adjustment they've done. Okay, but we're just running with that figure. Okay. Or I could actually fix the model answer. I could fix the model answer. To be perfect. Okay, 65922. This should ripple through anyway if I get it right. Okay, that should ripple through to everything anyway. That does. Okay. Then I just need to change that. $65922. Hopefully that's what I put in down there. 65922. Okay. Right. Obviously you just use the figure provided, okay, but I'm just changing this question so that it does end up being 28%. It should ripple through everywhere, which is good. Okay, income tax expense is what we've calculated. Okay, what they told us. Okay, it gives us a profit after tax of that. Then there's the I think there'd be a note for that revaluation of land, wouldn't you? Okay. Okay, there should be a note. Okay, I'm going to add a note, and it's going to be around property, plant and equipment, which is going to be note 8 anyway, so I can just put an 8 there. Okay, we should have a note around that revaluation. Okay, okay, so the okay. Just a format thing. It's not a biggie. Okay, so therefore the total comprehensive loss for the year is that. Yes, that. Okay, gives us that. Okay. Alright, so that's the income statement done. Okay. Next thing is the statement of equity. Okay, alright, so what we need to do is we need to say what was it at the beginning. Contributed equity is, there's the equity accounts here, is that. The retained earnings is that. The revaluation reserve is that. Okay, so that's good. So that gives us the opening balances, total comprehensive income, and that's in two parts, right? There's the retained earnings, which is that amount, and there's the revaluation surplus, which will be reduced, so that goes down. Okay, distributions, okay, that's that other one, is the dividends we paid out, which is dividends paid out, the figure there. So we just got to make sure we post everything in the trial balance. Okay, balance at the 31st of March 2017. Okay. Okay, for some reason, I know. Just hit that, I could have moved something else. Okay, so those pretty much is just the sum of what's above it. Okay, so that should give us the, so that should be the statement of movements in equity. Okay, so we're getting there. Income statement, statements moving in equity. Okay, so we posted pretty much all of those, and all of those. Okay, so we should be good with that. Okay, the rest of the stuff should be in the balance sheet. Okay, Facebook posts popping up. All right. Get these from a few places. Where did I get to with the notes to the accounts? Okay, I probably should finish off the notes to the accounts before I do that. Tax account opening balance, we owed nobody nothing. We didn't pay anything. The current year's tax is that amount. Right. I should turn those chats off next time, eh? Okay. Bang. That works. Distributions. We know there is a interim dividend, but there is no final dividend. And the interim dividend was that amount. We've actually already posted that anyway. Okay. No final dividend. So those are those. Accounts receivable. How much do we... What's the accounts receivable? It's accounts receivable is that less the allowance for doubtful debts, which is that. Okay, the reason I did that is so I could do that. So now that gives us for the figure for our accounts receivable. Okay, inventory is relatively straightforward. Inventory is what inventory is. Go to the trial balance. This is a current asset as well. It's there. There's the inventory balance. Okay. So in the inventory is inventory. Note 7. Suppose and bank is just, there's no note for bank. It's just getting it from up here on the trial balance. Okay. So that's good. Total current assets. There's some of those. Property and plant. Okay, what we'll do is, shall we do the note to the account? Okay, we might as well do this. Actually, this is probably one of the more cost and valuation of land is, we go up to the trial balance, there's the land, and this is at the beginning. Okay, the buildings were there. There's property and plant as well. Equals property and plant. is there. Okay, so we're just getting the opening balances. Okay, accumulated depreciation. We know land doesn't appreciate, so that's going to be pretty good. We know buildings was safe picking up the opening balance because that they hadn't calculated it then. We worked out that bit, so that's cool. So we just need to pick up the beginning balance of that. Property and plant is the ones where they'd already done it. So we need to do it's. Actually, I'm going to make sure I'm going to do this as a negative. So that is that. Okay, that's pretty good. Okay, and that one there is going to be, but we don't want to. That already includes this year's, so we need to reduce it down by the amount depreciation that they already had worked out to get what came forward. Okay, so that's that. Okay, so that should be correct. Book value at the beginning should be that and across. Okay, it's pretty good. So the opening book value should just be what that is above it. Okay, additions, there are no additions or disposals of anything, which is good. Revaluation surplus, we know that is only on land. That actually was backwards. That was that amount. Okay. I did enter a minus, so let's just check what the formatting is. Format cells. Number, that's decimal places 0. Okay. Right. Now that should be, I thought I had put minus that anyway. Okay, that's pretty good. Depreciation expense, there is none on land. There is some on buildings. There is some on buildings. There it is, there's the year end. And there is some on plant and equipment. So make sure I'm getting these the right way around. Depreciation on plant and equipment is that one. Okay. These I've got the totals over here working for me. So the net book value is opening book value. Opening book value, cool. So the net book value will be that plus that. Okay. I should have done those as minuses. That's better for me. Okay. And then should be just the ones above it, right? Okay, so that's what the assets should look like at the end. Okay, and this is a bit of a reconciliation. Cost or revaluation is cost or revaluation is that. Okay, cost or revaluation is still that, and that is still that. Okay, accumulated depreciation is nothing. Accumulated depreciation is what you started with and the additional. Okay, that should be equals what you started with plus the additional. Okay, so the net book value, this is just a, okay, so this should equal the line above it. Yep, cool. So that line there, this is just a way of checking, I suppose, does equal that way, so it's a sort of a check and balance type thing. Right, so that's done. Okay, so that's, so now with the fixed assets, book value, okay, plant and equipment, there's only a total anyway, which should be that figure there. Right, so let's check plant and equipment equals, we can go to that note 8, and there it is there. Okay, investment in, there's a note for that. There's a note for that. And equity, I haven't filled it in yet though, so okay, let's go investment. Let's do the note. That's the notes are done. Equity beginning balance equals that. There's no changes, no revaluations. Balance at the end of the year will just be what's above it, and we can actually just pick that figure up for here. Okay, so that will equal the equity investment. Trade payables, okay, looks like the nets note, which is accounts payable, which is the accounts payable here, down to accounts payable. That's the next two, right? We don't have one for tax, we don't need to put tax in there because it's got a separate account. Okay, so those three up there should be that. So now we can go accounts payable, note 10. Tax is tax payable, we've already worked it out, note 4, there it is. Okay. Okay, the term loan, there's a note for that. And that's where we put all that information that they provided us, okay, about the term loan. The term loan is equal to that, okay. We can pick that up from there again, equals the term loan, okay. Share capital, we know what that is. It's up there. Okay. Distributors remuneration, that's him, Mr. Fielder. Now that's a director's fee, which is up here. Director's fees, 88 grand. Okay. Capital, okay. There's the note, we talk about the construction costs, and that's 2100123. So that's the notes of accounts. And we put in the date that the accounts were reauthorised. So those are the notes to the accounts finished. Okay. Contributed equity, revaluation surplus, maybe the word it needs to be spelt better. Okay. Valuation, valuation, surplus, looks unusual. Okay, retained earnings. Okay, that's that equity, which is the share capital, that amount. Okay, should be able to pick up the these from the movements and statement of equity. Okay, we should be able to pick up the retained earnings from there as well. We could have picked up all three from there actually. Okay, we could have put, I'm just yeah, just 1 second. Cooking the barbecue at the same time here. Okay, total equity equals those ones above. Okay, total assets equal, there's the total non-current, current is that. Total assets equal those plus those. Cool, that's that. And total liabilities equals current. Did a total of current. Current. Total liabilities equals current plus term. Okay. Big test, what are net assets? Net assets equals total assets minus total liabilities equal total assets minus total liabilities. Okay, so it's out by 125,600. Okay, so I haven't picked up something properly. Accounts receivable. Okay, 62,800, that seems to ring a bell for some reason. 62,800. Was that the text I had? No. Okay. Right, so that is out by 125,600. So I have done something slightly wrong. Or I haven't picked something up. Accounts receivable, bank, inventory, property, equity investment. Okay, 26. The 223 total assets 2600. Trade payables, tax payable, total current liabilities, term loan, total liabilities, net assets, equity 62,862. Right, I'm going to check it out and I'm going to put I'm going to find the error and get back to you. Okay, we'll stop that for now.